Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the most bullish scenario where we're having an impulse to the upside in a wave 1, look for a 3-wave corrective structure in 2 and then continuation to the upside in a wave 3 to take the all-time high. Most common target for a wave 2 is the green box between the 05 and the 786, taken from the low to the high of wave 1, giving you a target between 64.3k and 59.8k. The 382 at 66k is an uncommon target and has been touched, and the 886 is a very rare target at 58.2k. We don't want to hit that, as that would significantly lower the probabilities for this scenario. The invalidation is taking out the low at 56.5k. What is tricky in this scenario, however, is wave 1, because if we put this wave 1 on the left top over here, then we have to count an internal 1, 2, 3, 4, 5. Wave 4 here is shorter in time than wave 2, which is not an invalidation, but most commonly a wave 4 is longer in time than a wave 2, so that is at least something to note. Also, this wave 4 is incredibly shallow, not touching the 0.236 Fibonacci taken from the low of 2 to the high of 3, which generally is a minimum target for a wave 4. And finally, if we look at an impulse in a 1, 2, 3, 4, 5, then wave 5 has the highest amount of volume compared to most commonly a wave 3. Now, ending a structure on a high amount of volume is more typical for an ABC or potentially WXYs. So therefore, we also have to then consider putting wave 1 on the right top here to then count a wave 1, 2, 3, 4, 5 wave structure. But the problem with putting wave 1 over here is that on some charts, including this one over here, we made a lower high by a few dollars, which means that wave 5 is a truncated wave, which is incredibly rare. So this does affect the probabilities for this scenario. The second scenario is also a scenario where you take out the all-time high first, but after moving up to take the all-time high, we get a retracement back inside the range to move below 56k. This is a expanding flat, 3-wave A, 3-wave B, and then a 5-wave C. The most common target for your wave B is between the 1.236 and the 1.38 Fibonacci, taken from the start to the end of wave A, giving you a target between 77.9k and 80.4k. If price would continue to the upside to hit the 1.618 at 84.5k, it significantly decreases the probabilities for this scenario, increasing the probabilities for continuation to the upside. Inside wave B, the most common structure is a zigzag family structure, either a simple zigzag in a 535 ABC, a double zigzag, a WXY, or a triple zigzag, but a triple zigzag is very, very rare. So on my chart here, we then count now a WXY, as this structure to the upside does count better as an ABC and then a wave W, looking for a wave X and another ABC to the upside in a wave Y. The common target area for your wave X is between the 382 and the 618, 66k to 62.4k. If price moves down and touches the 0.7 at 61.1k, the probabilities for this whole scenario are decreased. After wave B, we look for an impulsive 5-wave structure to the downside in a wave C, which has to end below the low over here of wave A. By far most commonly, the only flat that wouldn't do that is a running flat in an A, B, and then a wave C, but a running flat is the most rare flat pattern. The final scenario is the most bearish scenario, but also has the lowest probabilities at the moment, which is a zigzag. We have a leading diagonal 5-wave structure in a wave A, then we need a 3-wave B and a 5-wave C, and it is wave B that is a problem in this scenario. Inside wave B, we have to count a 3-wave corrective structure to the upside, and we can't put this wave B on the left top, because then for wave C we need an impulse to the downside, but wave 2 is not allowed to go above the start of wave 1, and on some charts this high has been taken, so wave B has to be positioned on the high here. But that leaves us with a bit of a problem. If we look for a zigzag in an ABC, it's much better to end the zigzag over here. If we look for a WX and then a wave Y, your wave Y in a double zigzag didn't move above wave W, and generally the minimum target for a wave Y is the 0.618 trend base fib extension, taken from the low to the high of W to the low of X, which is above the all-time high and a level that we haven't hit. A triple zigzag is very rare, a flat structure is irrelevant, a sideways double combo here is also irrelevant at the moment, right? And a triangle is also not something we're looking for at the moment. So preferably, if we are looking for a wave B with eventually a wave C to the downside, this wave B is not yet finished and you have a first finished structure over here and then a wave W, creating a bigger wave X to the downside, then another wave Y, and after wave Y, we then look for a bigger wave C towards the upside. So the probabilities would be higher even in this scenario to still look for at least a bounce, observe the move to the upside, and then here we prefer to then move down because the invalidation is taking the high at 73.8k. We do have impressive support to the downside, an important level over here, the yellow box. First of all, we have a daily gap here where the daily gap low is at 63.1k. That is in confluence with the value area low of the volume profile of this range as well, and an important support resistance area in this range, giving you a support area between 63.5k and 62k. We also have some news this week. First of all, tomorrow on Tuesday 2:30 p.m. and then also on Thursday 2:30 p.m. Central European time, so make sure you trade safe around these hours. And if we then finally look at the probabilities of the different scenarios, then currently the probabilities are higher to take the all-time high first, either with a WXY scenario or the impulsive scenario, but that is something we can observe after we then take out the all-time high. And on the number 2 spot, we then have a zigzag to the downside in a wave A, finished B, and a wave C, as preferably in this scenario your wave B is not yet finished. You at least continue ranging and create a bit of a bounce first and then move down at a later stage, and we will have enough time to then observe a potential local move to the upside. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.